I think the 1997 analogy just says it's going from here to massive.
Right.
How it gets there, I don't really know. I've got some reasonable clarity between now and end of year because there's a seasonality that is pretty observable. Beyond that, it becomes more speculative in nature because we don't really have the full signals. I think the adoption by institutions continues. And as we all know, they tend to do January asset allocation, particularly if it's a new asset class. Hedge funds have a new P&L. They tend to pile in. My guess is this cycle extends a bit further than people expect. But there will be a bear market. What is that going to look like? Is that going to look like the last one that we had? It's probably a mistake to think that because the players are different. Maybe it's longer. Maybe it's shallower. Maybe it's just choppy. Or maybe it doesn't do that at all. Maybe it just keeps having these sharp corrections down 50%. And then 6 months later, it's at new all-time highs again. We knew what the central banks would do, but they did it harder and faster.
Yep.
And what we ended up with was the shortest recession in all recorded history and the biggest recession. That never happens. So what we've done is we've created a reaction function in the central banks to do more.
Yep.
Because Janet and Jay will look at each other, high five, and go, we nailed it. The world stopped, and we only had a 2-month recession, and the markets recovered pretty quick. Now, we know that the reality of the underlying economy and other things is not so great, but for the central banks, they're going to do more of this. Why would they not? They're now thinking, do we need a business cycle at all? But what they're doing, if you actually look at it, the central bank balance sheets, the big G4 central bank balance sheets, are growing at about 15% a year. So I started thinking this through and then thought, I know a lot of people use M2 as a way of understanding printing, but I just thought I'm just going to use the balance sheets because that's new stuff that we know that they're doing. And I know that there's it's not a pure way of flowing into the economy, whatever. But anyway, so I put the S&P against the Fed balance sheet, and all of us have observed that correlation over time. And the thing was, it kind of told us what we deep down know is the S&P's kind of gone nowhere since 2008. It fell in 2008, the money printing came, and the S&P's basically been going sideways. And then I looked at gold, and it kind of had even underperformed the Fed balance sheet. I looked at real estate. It was identical to the Fed balance sheet.
Yeah.
I then looked at the NASDAQ, and it had done better because it had all these network stocks in it. And then I looked at Bitcoin. It was like, oh, this is a whole different world.
Mm-hmm.
So there was only one asset that looks like it offset the printing of money. So if you know that, and you are able to trade it, then let's say we go into your quad 4, what are you going to buy?
Right.
Well, the highest upside is going to be crypto.
Mm-hmm.